Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
As you can see, we are on location. We had to kind of pull over and find an area where we could video that would not be super crowded, just like that way about 100 yards. This is a super famous temple. So there's people walking around taking pictures and stuff. But anyway, we're here in Japan. We're going to do an update to Las Vegas real estate market.
That's right. So just because we're in Japan doesn't mean that we've abandoned you guys. We're still here with the update for the Las Vegas real estate market.
Yeah, we're here for another week, so we'll get this going and then finish up. Okay, so we're going to start here with this data. The data is from a week ago. We should get new data maybe tomorrow, and then we'll do another update maybe at one of our other locations, Mount Fuji or someplace fun. So the market action index was 49 today, which was the same as it was last week. But it is sort of cooling a little bit, right?
It is, which is very typical for this time of year. We've talked about this before, that come May, the spring season, the spring buying and selling season winds down and we start going to summer. Summer gets a little lazier. People are still looking for homes, but not as much. Between the heat and summer vacations and kids being out of school, people have generally wrapped up their house shopping.
Let's jump over and look at some of the stats here. Really, the important one is you can see the market sort of has peaked, basically, which is its normal peak that it does every spring, and then it's sort of dropped back. It's going to nice, gentle decline, both in number of sales, price per square foot, and all those stats. Time on the market probably go up a little, but this is normal, right? This happens every year at this time. We got another chart that'll show you that really emphasizes this.
Yes, that's what we expected and what we've talked about.
Okay, let's jump over here. This next one, inventory. Sorry, I have to wear the glasses. It's actually pretty bright out here, even though we're in the shade. And we'd be super squinty if we didn't do them. You can see the inventory is starting to climb, but if you look at previous years, inventory was also starting to climb this time of year. I don't expect it to get super high in Las Vegas, maybe up to 4,000 houses in Vegas in the fall. That'll be sort of a decent number. If it gets that high, you can see it got up to like 6 at the peak after 2022. That was kind of quite a bit of inventory, but it was kind of a normal market too, right?
Right. And if your TV is bouncing around or your screen, whatever you're watching is it's bouncing around, it's not you, it's us. It is a little bit breezy, so occasionally our camera moves.
Yeah. Okay. The next one here is this price per square foot, and oh, hang on, the phone just did a weird thing. Okay. Anyway, all right, price per square foot. You can see it's just kind of continuing its little increase. You can see that there's a little seasonality here in price per square foot. It's kind of more in the spring and a little less in the fall. I think the housing crashers will probably be out talking about how this is the crash. Like they're going to, oh my gosh, all the videos, they're going to start pointing at the lowest lows we've ever seen from the last couple years and say, look, this is a normal market. And all of a sudden there's 30% more inventory. Oh my God. Well, but then they're comparing something from like, years ago or a couple years ago and not looking back at say the last 15 or 20 years.
Right. But, that's why they're the crash bros.
Okay, here's the other one. This is from Redfin. This is median sale price across the U.S. This is pretty telling. What's cool about this, you can see that seasonality. You can see all those little peaks where it kind of goes up and then drops down. That's spring to fall. And then you can see the post 2020 years and then the 2022 where there was a frenzy because of interest rates going up and people just frantically were overpaying to buy houses. That's a little fake. If you just took out that one peak right there, this is almost pretty much a straight line. This is the normal thing. Now, what's funny is if you look at the Crash Bros charts, they make up they physically make their charts. This looks like this. It looks like home prices like tripled in 2 years. And oh my gosh, this is going to crash. This is blah, blah, blah. But if you look at this is pretty realistic. You pretty much draw a line between that. And you can see that and remember this, two of those years were inflationary, meaning we had 8% inflation. So home prices were going up. If home prices go up at 6% in a 2% inflationary environment, home prices are going up at 12% in an 8% inflationary environment. So your home prices went up more because of inflation. So you don't have a crash because inflation. If that's the case, why doesn't everything crash? Like, why doesn't the price of McDonald's Happy Meal crash, right? Like, everything should crash because everything costs more. It doesn't work that way.
Right. So, look, I mean, as far as homes are concerned, the market's doing what we expected it to do. The Fed is expected to have probably a couple interest rate reductions this year. What impact do you think that's going to have, Todd? Do you think that people are going to go out and shop now, or wait for those interest rates to go down?
I don't. I think it'll be interesting buying season in the fall because I think there'll be some deals out. Not really deals, but there'll just be more inventory to pick from with less people. But the problem is, like what we're seeing in Vegas, is over 30% of the purchases are cash still, and this is all through the markets, not just the low end. So people are still not really sensitive to interest rates, and other people are just saying, "Screw it, I'm going to buy," because I don't want to wait 2 or 3 years for interest rates to go to below 5 and then pay $100,000 more for the house. Like you've just walked away from all that equity because you wanted to wait to save $300 a month on your payment. If you save $300 a month on your payment, you're saving $3,600 a year, but you give up $100,000 in equity to save that. Doesn't make sense. And I think some people are short-sighted. They only look at the payment. But bottom line is, for Vegas, if you look at the market, it's a normal market. It's behaving normally. We're in the normal thing where we're going into the summer and fall, which is, we're going to track this every week, of course. But what about a sales pitch if they want to sell?
All right. So if you want to sell a home, if you want to buy a home in Vegas or anywhere else, please feel free to reach out to us, because clearly, even when we're on vacation, we take care of you guys and we take care of our clients. So please reach out to us. The contact information is below. We would love to work with you. If you are not buying or selling in the Las Vegas market, don't worry. We can still help you out. Go ahead and reach out to us and we'll let you know how. We love people who watch us on YouTube, so we enjoy meeting you guys and we enjoy doing business with you. So we appreciate your business and we appreciate you watching. Please subscribe, hit the notification bell, share the video, and we'll see you on the next video.
Thank you, and arigato gozaimasu.
Bye.
Bye.